In this video, I'm gonna break down the very popular question that I get all the time. If I had $1,000 to invest in crypto right now, how would I do it? And guys, this doesn't matter if you have $1,000 right now and you're brand new to crypto, or you already are in crypto and you happen to have $1,000 laying around that you're wondering how to invest in the crypto space. This is not financial advice. Keep that in mind. Everything I tell you in this video is what I would do, my strategy. It is just food for thought on things to think about on how you potentially could play the market. And I'm going to tell you at the end of this video how to dollar cost average in and out of the market. This is critical for you guys to understand this methodology. It is so much better than trying to time the tops and time the bottoms, because it is impossible. Guys, this is very exciting. If you're looking forward to this, make sure you subscribe, make sure that you smash the likes, and let's dive into it. Let's first talk about how would I break down this $1,000? Starting out, I would take more of an 80-20 approach, where 80% of the investment goes into what I consider blue chips like Bitcoin and Ethereum, and 20% go toward that way more risky, yet way more potential for high rewards. And then you can take your profits from your very risky investments and potentially put those back into the blue chips. And as you start to practice more and understand more, you can get into the slightly less blue chip, but still pretty blue chip altcoins like Solana, like Avalanche, these kind of projects as well. Remember, do your own research. It's never someone else's fault other than your own if you lose money in this space. So you have to understand the potential risk and what you're investing into. Always do your own research. But let's say that you identify something because you watched one of my best DGen videos or whatever, and you like the idea, you went and did some research and you decided that you like this thing, you're bullish on it long-term. But do you buy it now? The market's in a big dip right now, right? It might be a good time to buy everything then. But what happens if it continues to go lower? What happens if it continues to go another 50%? Well, you spent your $1,000 and now you can't buy an even bigger dip, right? So now you've bought and you've lost 50% of your value. That's terrible. Now, if today happens to be the bottom and it happens to go up, 10x over the next few months, amazing, right? Like that, but that's super rare. Another thing I would encourage you guys to do, if you have some time and it's probably worth your while, is to try to use whatever your skill set is to add value to new projects that you're interested in that haven't launched yet, right? So let's say that you're good at making infographics, or you're good at writing articles, or you're good at some type of talent. Just look at a Twitter or a Telegram. Maybe you can help manage a Telegram community, or help with Reddit or Discord organization. Whatever it is that you think you could add some value to projects, offer that. This is always the best way to get into things. And guys, I have said this so many times on this channel, but if this is your first time watching this channel, first of all, make sure they're subscribed. But second of all, understand that I am definitely against becoming a trader. Now, believe it or not, almost every single time I meet somebody who's looking to get in the crypto space, they talk to me about trading. It is mind-blowing. People think that crypto, you just have to trade to get involved, and that is super dangerous in my opinion. Something like 99% of traders lose money. It is super dangerous. I highly advise against it unless you want to take a year or more, study your ass off, and then become very good at it. I would highly suggest against doing that. A much better way to enter the market is what we call dollar cost averaging. So what is dollar cost averaging? Dollar cost averaging is a strategy that involves a periodic purchase of an asset using the same dollar value over time. Employing a dollar cost average strategy with Bitcoin over the past 52 Mondays would have generated a return of 71.6%. Now, this is old tweet. This is from November 26, 2020. But essentially what they're saying is at this time when they did this study, that you would have been up 71.6% over the course of the year if every single Monday you would have put in, let's say $10 or $100 or $20, whatever you can afford, whatever is your disposable income. And guys, always never invest more than you can afford to lose. So just assume that in crypto, everything could go to zero. And if it does, are you going to be okay in life? So let me show you some examples of how powerful dollar cost averaging is. First of all, let's look at the last year in crypto. So we're going to go here to 1 year, and you can see that if you invested, doesn't matter what the dollar value is. Let's say that you bought one Bitcoin, but it could have been $1,000 worth, whatever. Well, exactly 1 year ago, the price of Bitcoin was $57,456. Today, it's at right now at $38,000. Woo, go pump in Bitcoin. And guys, if you're watching this, I made this yesterday, so the price might be different when you're watching this, but nonetheless, it's definitely below $57,000. So if you would have put in, let's say $1,000 a year ago, you would be down a lot today. Instead, let's go and look at what would happen if you would have put, let's say $20 a week or whatever it was into crypto a year ago. So let's say that it's, let's see, $10. Okay, so $10, and then let's go $20 because that would $20 every week for 1 year for the past year. You would have invested $1,060 and it would be up 17%. In this situation, 1 year ago, I would have invested $1,060 and today it would be worth $1,244 and up 17.43%. Now, that's pretty good, right? That's like 34 to 100 times greater than a savings account, for example. In fact, if you would have invested in the Dow Jones Industrial, you would only be up 1.2%. And if you would have invested in gold, you would have been down 0.67%. So in Bitcoin dollar cost averaging, outperforming everything, outperforming a lump sum investment, outperforming gold, outperforming the stock market, everything. Now let's take a look and say 2 years. This is a great calculator, guys. You can come and see it. This is accumulating for 2 years, every single week, $20, starting 2 years ago. And look at this, guys. $2,000 invested turns into $6,682 with 218% gains. And this is compared 218% compared to the Dow Jones, 15.7%, and gold down 1%. So 3 years, even crazier, right? $3,000, $3,140 invested, 380%, almost 381% gain from Bitcoin. Gold up 7.4%. The Dow Jones up 20%, smoking everything else. Now, just for fun, what if we got a little more aggressive and let's say that you have $100 a week to invest and you wanted to do over the past 3 years. So $15,700 invested, still 380% gains, but that $15,000 turns into $75,429, guys. Now you can start to see just how powerful dollar cost averaging is. Now, I want to give you one more example. Basically, what this is doing is it's breaking down the use case, and I'll just read it to you. It says, in the first case, the investor could have purchased a single Bitcoin for $7,600 in August 2018. Alternatively, the investor could have employed the dollar cost average strategy by breaking this amount into monthly investments of $633.67. The table below provides a breakdown of the amount of Bitcoin purchased each month. So you can see here that every month, the guy's spending $633 or the girl, whatever. And this is how many Bitcoin they're purchasing every single month and how much they're accumulating. Well, you can see after only 8th month, they have managed to accumulate one whole Bitcoin. And guys, this is only like $180 a month or a week or whatever. And they're managed after just 8 months to accumulate one whole Bitcoin. Again, this was when Bitcoin was only $7,000, so much cheaper. But as you can see here, it says, as can be seen from the table above, the investor could have been able to accumulate a whole Bitcoin by the 8th month, March 2019, at a cost of $4,936. So instead of him spending the whole amount the first time, which would have been Bitcoin for $7,604, his average for that Bitcoin was only $4,936. So you can see that because the price of Bitcoin actually started going down, he was able to buy in at a much cheaper price, lowering the average purchase price of the Bitcoin. This holds true for any cryptocurrency. And this is a cool article. We will post it in the description below, but you can go, it goes on to explain the same philosophy and theory if the guy or girl were to have purchased Bitcoin, Ethereum, and XRP, and it breaks this down in more detail so you can go in to see that. And guys, that is it. So let me know in the comments below if you have any questions about this video. What do you think about it? Do you think that it's awesome? Do you think that it's worth it? Do you think this makes a lot of sense? That is my strategy. Guys, thank you so much for watching. I will catch you on the next one. Bye-bye.